ONGC in Oil India again as crude prices continue to surge amid escalation tensions between Israel and Iran. The prices are currently at 5-month highs, with Brent trading around $89 per barrel. Ultratech Cement rallies after the company commissions 2 units with a capacity of around 5.5 million tons per annum. The company will also invest around 32,000 crore rupees for the capex over the next 3 years. Brokerage Morgan Stanley is bullish on the stock. JSW Energy surges as it approves a QIP to raise up to 5,000 crore rupees at a floor price of around 510 rupees a share. The proceeds will be used to repay debt and invest in JSW Neo Energy. Anupam Rasayan gains over 3% after the company signs an LOI with a Japanese multinational company worth around 740 crore rupees over the next 7 years. And IB Real Estate also surges ahead of the board meeting, which is scheduled on 5th of April to consider a proposal to raise some funds.
Hello and welcome. You're watching us here on Chartbusters. As on cue, all the 3 frontline indices, including the mid-cap index, is now doing well. The Nifty and the Sensex in the green. The Nifty Bank virtually in the green as well. The mid-caps doing extremely well. I'm Mangalam Malu, with me Nigel D'Souza. Nigel, it was a low-hanging fruit, right?
Yeah.
Dips were being bought into. This dip has been bought into as well.
Well, that's right, Mangalam. You know, the dip has got bought into, but normally that's the intent, right? You go ahead and buy the first dip. To see some kind of follow-through from here, I think the index that was actually trading in the red on the top of our screen is going to be most important, which is the Nifty Bank. That's still mildly in the red. That has the weekly expiry that plays out, and that's going to be the driving force from here on. So that can get into the green, where it'll give the bulls further legs, but a very, very good-looking screen. You woke up this morning, you said the troika. That's the dollar index, the yields, Brent crude prices. They were the global factors against us, but domestically, things are looking up, and explains why that dip has got bought into. Well, let's get in Sony Patnaik of JM Financial Services, who's joining in to give us a quick technical check on the markets. Hi, Sony. Good morning and good to see you win. Well, that dip got bought into. What do you do from here, though? Do you think we are going to move further higher from here? Would you take some money off the table because you're getting close to around $100 odd?
Good morning, Nigel and Mangalam. Thank you so much for having me on the show. I think rightly pointed out the dip has gotten bought into. 22,300, 22,200 are still acting out as a very strong support for Nifty. There's a resistance around 22,550. I think the moment it's able to cross that resistance, you can see 22,800 plus levels also in this front screen. I think one can just continue to accumulate and hold this dip that they may have bought into and look for the targets of 22,800, which could take like about 2 to 3 days, and you can see those targets coming in. I think similarly for Bank Nifty, quite strong, 47,200, 47,000, very strong supports. And Bank Nifty has a resistance of 48,000. So I think any fresh rally for Bank Nifty can only be seen once it is above 48,000, and above that you can see 48,600, 49,500 levels also getting tested. So both the indices, positional play can definitely hold on for the dips.
All right, positional play. Nigel, you spoke about the weakness in the troika overnight for us. You know, our troika is actually doing a lot better. What is our troika here? We have Infosys, which has moved to the high point of trade. The other one, which is HDFC Bank, which has been doing well in yesterday's trading session, continues to do well today as well. Opened in the red from there. That dip was bought into on HDFC Bank and now has recovered over 1% from the lows at the high point of trade for that index heavyweight as well. And the third one that comes up is Reliance, still in the red, but has recovered about 0.5% from the lows. Let's see where that goes. The IT stocks doing well, the Nifty Bank doing well. If Reliance can perk up a little more, then maybe we could see the markets move higher from here on as well. But individual stocks, Sony, what's on your list today?
Mangalam, the first would be GAIL, Gas Authority, looking quite strong, giving a fresh breakout here. So you can buy at current levels on any small declines up to 188 can be the range you can buy, keeping a stop loss of 182 and target of 196 to 200. There's an equal option chain breakout above 185 as well. So the stock is looking quite good on charts with long built-up positions. The second is GNFC. That stock is also looking good with long built-up positions today and keeping a stop loss of 655, targets of 700, 710.
Okay. All right, Sony, thanks a lot for joining in. In fact, giving us your view on the index as well as on individual stocks. By the way, take a look at a few of these stocks. Suzlon, I recall, had opened up in the red. Now, that stock has done a U-turn. It's moved to the high point of the day. Yesterday, we had the management of IMFA who was speaking to us. They were talking about trends in terms of pricing, input costs were lower, and also they've given out a big dividend. Ahead of that big dividend, ahead of the record date, that stock is now up close to on 10%. It's made a fresh 52-week high in today's trading session. Indian Metals is the one that we're talking about. And Vascon as well, another stock that got beaten badly down. That one as well has pulled back in today's trading session. So quite a few stocks, Mangalam, from the broader markets that are actually trading in the red. They've done a big U-turn, and some of these stocks are moving on very, very large volumes.
Absolutely, Nigel. You know, these stocks are moving extremely well. IMFA, one of them up 11%, like you pointed out. But I'm also looking at a lot of these defense stocks which have perked up once again. Mazagon Dock is up around 8%. Decent volumes out there as well. We've seen Garden Reach Shipbuilders as well as the other one, which is up 8%. Cochin Shipyard is up 6%. So this pack, which was doing extremely well in all of last year, had come in for a bit of profit taking as we move towards the end of the financial year's closure. Now they seem to resume their up move, so to say. It will be very interesting to see what kind of updates that these companies report for their fourth quarter as well. Typically, a lot of order wins get closed out, so those are a bunch of stocks which are doing well.
Just one more, Mangalam. L&T Technology Services. You know, the stock was up, I recall, just around 1% at the start of this hour. You know, the stock has suddenly moved up, and it's moved up on very, very large volumes. Actually, it was more or less flattish. And I think that chart should come up for you. At around 10 a.m., the stock has got excited and spiked up to the high point of the day. So that's about some stocks that are moving around. Well, let's get you some ideas then for profit in our special segment, Money Control, coming in from Money Control Pro. Anubhav Savu on moneycontrol.com joins us to talk about a stock that is tracking rather closely. Anubhav, take it away.
As a contrarian pick on chemical sector, we are looking at oleochemical company Galaxy Surfactants. Now, stock has significantly derated since the pandemic highs in October 21 and now trades at 13 times EV by EBITDA for fiscal year 26. Now, this can be attributed to the sharp reduction in valuation premium for the chemical sector. Some of the leading chemical companies were enjoying valuation premium due to supply side economics. However, as the supply chains got restored, prices for various intermediates got corrected. Now, for Galaxy Surfactants, what added to pain was the contraction in Egypt and Turkey region due to geopolitical developments. That said, there is a gradual volume-led recovery in these regions as well as in the advanced economies. For the domestic market continues to do well despite subdued rural demand. Now, company posted an 8.5% volume growth in 9 months of fiscal 24 against the guided range of 6 to 8%. In addition, we believe a large part of the supply chain disruption in pricing caused by the pandemic is also over. Prices of key raw material, fatty alcohol, has reasonably stabilized. Overall, what keeps us constructive on this FMCG proxy is that it exhibits better free cash flow yields compared to leading FMCG players and is available at nearly half their valuation multiples.
Right, so that's an idea coming in from our colleagues at Money Control Pro, an idea for profit. But before we slip into a short break, here's something that you must not miss out on. CNBC-TV18 presents India Exchange, where market experts and industry stalwarts will collaborate in insightful discussions on India's economic path and the evolving dynamics of the Indian market going ahead. Mapping the macros with City India economists Sameer and Chakrabarti catch a jugalbandi between market veterans like Manish Chokhani, Ramdev Agarwal, and the return of the animal spirit within India Inc. as well, which is a conversation that we'll have with V. Vaidyanathan of IDFC First Bank, Keki Mistry and Manish Kejriwal of Kedara Capital. They'll also be chasing alpha with market experts like Nilesh Shah of Kotak and Prashant Khemka of White Oak Capital, along with Anish Tawakle of ICICI Pru MF. Don't miss out on this. Tune into CNBC TV 18 tomorrow. That's April 4th, 5:30 p.m. onwards. Welcome back. A bunch of stocks doing well. Nippon Life Insurance has moved to the high point of trade, up around 2.5%. We're seeing some pickup in a bunch of these pharmaceutical names as well. Oro Pharma is up around 3%, has moved well too. But it's the cement stocks which are in focus, led by Ultratech Cement after the company's commissioned 2 new greenfield units. Nigel, Tell us all about it.
Well, Ultratech Cement has proved that they are the king of the cement industry and they are miles ahead of the rest and they're stamping their authority. I recall a couple of years ago when you had a formidable new player in the terms of the Adani group that entered. People said that Ultratech Cement is going to face pressure. Well, they've gone ahead and upped their game actually. They've commissioned 2 greenfield capacities at Tamil Nadu as well as at Chhattisgarh. And that capacity was close to around, between them around 5.5 million tons. Over the last 12 months, they've increased capacity by around 18 million tons odd. And now the total capacity goes to around 151 million tons. That's, a massive number actually, 151 million tons. And they're put into context. They're saying that the capacity is more than 150% of what the United States has and around 80% of what Europe has. The expansion trajectory as well, just to put into context, they took close to 36 years to increase capacity to around 100 million tons. That's the Aditya Birla Group. And in the last 5 years, they've added 50 million tons. So that's the kind of run rate that they're going at. In terms of the growth, well, they've outpaced the industry. The industry has increased capacity by around 4 times, while Ultratech Cement has increased capacity by close to 11 times over the last 2 decades. And they're not done. They have their eyes set on 200 million tons. Because the current capacity is around 151 million tons. They've already have work in progress for around 35 million tons odd. And add to that, the Kesoram Industries acquisition that will come into its fold. So they're saying in the next 3 years or so, they're scheduled to spend close to around 30,000 crores. And the capacity will move to around 198 million tons odd. So that big boy is putting its hand up and said, hey, I'm the leader of the pack.
Absolutely showing its leadership, Nigel. But with so much capacity, the question is the prices. What happens to that?
Yeah, well, Mangalam, there were some unconfirmed reports that were suggesting that there are price increases that's taken up. And the unconfirmed reports suggested that price increases have been affected by around 20 to around 80 rupees across geographies. Maharashtra around close to around 20, 40 rupees. And in South India, parts of South India, it was even 50 to 80 rupees odd. But I'll tell you what, the price increase has not yet been affected. The hope and the push is that this can happen. And, you shouldn't celebrate ahead of time. So the key to track from here on will be how much of this proposed price increase is accepted. Remember, towards the end of the fiscal, you see a lot of volumes that are pushed through. So some of those dealers, they'll still be sitting on inventory. So once that's cleared out, then they'll take the fresh stock. So you'll get a better sense in terms of pricing once demand trends come about. And also in an election year, to push through very large price increases becomes a little bit difficult. But there's good reason for prices to be increased because in the past quarter, if you look at Q4 pricing versus Q3 pricing, well, they're down by close to around 5%, and particularly South as well as East India, they took a harder knock in terms of pricing. So the quantum of the proposed price increase can be rather large out there. What was good though for the past quarter was that volume growth could be a little bit better than expected. But brokerages were talking about this. Come April, they were expecting a price increase. So they continue to say the quantum of the price increase will be monitored. Jeffrey's view comes up for you on the screen. Incred as well was talking about a price increase. So there will be a push, but I think a better trend in terms of pricing will come about, maybe in the second week of April. So don't jump the gun. Price increase will come about, but quantum needs to be tracked.
All right, Nigel, thanks a lot for that. So that's about the cement space. But Bharat Forge is one of the stocks which is lower after North American Class 8 truck orders fell 9% year on year in March. Sonia joins us with more. Sonia.
Thanks a lot for that. So, the North American truck orders have fallen both year on year as well as month on month. And that's something that's not gone down well with the street. If you look at it, it's a 9% drop year on year and 33% on a month on month basis. North American orders just coming in at 17,300 units. And the orders have slipped below 20,000 for the first time since August 2023. And this is the 4th consecutive month that we've seen a slip in the North American Class 8 truck orders. Now, this is also something we've seen across the board, not just in North America, but even in the Indian market. The commercial vehicle industry has seen a moderation in growth. This could be on the back of the high base of last year. And remember, companies like Bharat Forge have a small presence, about 10-11% in the North American truck market. Hence, there is a little bit of pressure that we're seeing over there. A couple of other stocks in focus could be Ramakrishna Forgings and some of the other names that have an exposure to the North American truck market. Back to you.
All right, Sonia, thanks a lot for that. Some developments at the bottom of your screen. This is with the SBI Mutual Fund House of SBI Mutual Fund. Sohini Andani, who's the senior fund manager at SBI Mutual Fund, has left the fund. She was managing some of the blue chip funds since 2010. So long career. Let's see what the next move out here is. The asset management space extremely active in terms of investor interest here with the kind of funds that are going into SIPs, etc. But let's take a short break. And as we do that, here's a another announcement that we have to share with you. We're launching CNBC TV18's first ever live personal finance webinar. It's called CNBC TV18 Accelerate Personal Finance Handbook with Sonia Shenoy. She'll be joined by 3 well-known experts on Saturday, 11th May, 9 a.m. onwards. We'll be diving into everything you need to know for mastering your finances, to learn how to grow your wealth, be it insurance, tax saving, managing your portfolio, retirement planning. There's so much to learn and lots to do. So whether you're in your 20s, 30s, or even your 40s, this live webinar is for you. We have limited seats, so don't miss your chance to register now. Scan the QR code, which is there on your screen, or alternatively, you can also log on to cnbc-tv18.com, and we hope to see you on the 11th of May.
Welcome back. Well, as we were telling you that the markets have seen a good recovery, particularly the broader market. So let's focus on a few stocks. Zee Entertainment, that's a stock in focus after it announced that the management would take measures to cut cost. Vamakshi joins us to run us through all of those details. Vamakshi, you go first.
Well, absolutely. Zee Entertainment definitely on our radar. Now, after the Zee Sony merger fallout, the management has taken initiative to set up several measures for cost rationalization, and the latest one being that MD and CEO Puneet Goenka has taken a voluntary 20% pay cut. Keep in mind that earlier on March 29, the company had announced that they have decided to prune its technology and innovation center, that is TIC, by almost 50% to achieve a cost-effective structure. Keep in mind that TIC last year had incurred an expenditure of almost 600 crores, and the management in the past has also reiterated that they will be focusing on return on investment. All of this is part of a much larger strategy. Keep in mind that on March 26th, they had institutionalized a structured monthly management mentorship program, which they call the 3M program. The objective behind this program is to achieve key performance metrics, included the targeted 20% EBITDA margin. Now, we also had a couple of analysts join us just a short while ago, and Karan Torani actually said that the cost rationalization measures are in line with what the management had guided for earlier. There is definitely an intent to improve profitability, but the stock would only re-rate only if the execution is right. The upside, however, is restricted due to legal overhangs. The linear TV business, where Zee Entertainment is largely focused towards, is not growing more than 3 to 4%. There is good opportunity in the digital business, but Zee Entertainment only derives nearly 10% of its revenues from this segment. Largely, when we look at the consensus ratings on Bloomberg as well, nearly 68% of the analysts have a sell call, and only 22% have a hold call on Zee Entertainment. So largely, the cost rationalization measures is keeping the stock in focus as of now.
Absolutely, Vamakshi. Thanks a lot for that. That explains why, despite opening mildly in the green, the company has, the stock rather, has seen a bit of a sell-off now, sitting with a cut of about 0.5%. That's about Zee. But from Zee, let's go to our friend in the studio, Horma. Zee, Horma, what brokerage reports do you have for us today?
Thankfully, it's not an exclusive, as you were alluding to the last time, but an interesting brokerage note coming in on Asian Paints, actually. That's from HSBC. It's a bullish come cautious note as well. They have maintained their buy recommendation, but they have cut their price target to 37.50 from 4,020 earlier that they had. What they're saying is that a possible imminent pricing disruption in the sector and the margin erosion prospects are weighing on the stock. And additionally, the bullish guidance which Grasim has given for its paints business. Now, remember, they want to turn profitable in 3 years. They want a 10,000 crore revenue guidance. That is further adding to the headwinds for Asian Paints. But what HSBC is saying is that the current pricing strategy that Asian Paints has is sensible according to them. And they say that the fears surrounding the stock are overstated. Hence, they have maintained their buy recommendation. The other one is UBS, and that is on Chola Investment Finance. They've assumed coverage on the stock with a neutral rating, and the price target is 1,290. But they say that Chola Finance is better placed compared to peers in a weak funding cycle, and that is because of a sector-leading EPS CAGR of 26% over FY24 to FY26. Also because of a largely secured and long-tenured loan book that the company has, and the continued diversification in its products that the company is offering. However, they are neutral because of the fact that the current valuations of Chola Investment, which is around 4.2 times price to book for FY25, is a 24% premium to its long-term average, which is around 3.7 times. As a result of which, they are neutral on the stock. Price target 1,290.
Okay, all right. Hormuz, and that exclusive?
I would like to know what your sources are telling you first.
That for after the show. Thanks a lot for that, Orvas. Well, let's go across to Upasna. She's tracking a few stocks that are on the news today. Upasna, you take it away.
Well, a couple of stocks on my radar today, Nigel. First up, let me start with GSW Energy, the company to raise up to 5,000 crores via QIP in one or more tranches. And QIP issue opens and floor price is seen at 510 per share. Hence, this stock will remain in focus. Next up is Anupam Rasayan. The company has signed an LOI with Japanese multinational company worth almost 743 crores over next 7 years. And the LOI is mainly to supply to advanced intermediates using fluorination chemistry. And the next up is Sunteck Realty. The company expands its annuity income business of its commercial portfolio. Hence, it has entered into a long-term agreement of its premium commercial building, that is Sunteck Econ, to Bennett Coleman. And the build-up area of this is almost 2 lakh square feet with a rental of almost 300 rupees per square feet per month on a carpet area basis. Well, which will generate a revenue of almost close to around 2,000 crores over a tenure of 29 years is what the company has indicated. And lastly, Indiabulls Real Estate will also remain in focus as the board meeting is scheduled on 5th of April, as the board will consider the proposal of raising funds by way of debt, equity or any other linked securities. Hence, these are the stocks that I'll be tracking.
All right, Upasna, thanks a lot for that. So those are a bunch of stocks which are in the news. Just before we slip into a short break, just keep an eye out on Varun Beverages. It's up around 4% from the lows. But enough about equity. Let's talk about the commodities. They're also on our radar. More so, precious metals, gold and silver. Manisha?
Oh, well, yes. Even before I start to tell you on what is happening with gold, if you bought gold, Mangalam, last year, same time at 55,000, at 70,000 today, you would be sitting on a 15,000 rupees per gram, per 10 grams rather of profit already. Well, we are looking at all-time highs in case of gold. In last 10 days, actually, every single day, we've seen an all-time high come in for gold. We've seen prices gain up by 8% in last 1 month, and we are up by 10% in this year until now. When the strength comes in because of safe haven buying, the wider conflict that Middle East is looking at right now also has to do with the fact that you're looking at strong buying coming in from institutions, family houses. There is buying also on ETF, pardon me. There's buying also coming in from gold bonds, etc., and that has been supportive. And not just gold, take a look at silver, because we've seen 4% of gains overnight into this one. 26-month highs is where silver is trading in right now. The solar industry demand, also the point that this is a 4th year of deficit when it comes to silver, are some of the factors which are supportive, with Street telling us that further highs is what you should anticipate in the second half of this year as well for precious metals.
All right, I've been lucky because I used to sit very close to Manisha earlier, and she used to keep telling me that there's no opportune time to buy gold. You should just keep buying. And Manisha, I've listened to that. So I've enjoyed some of those gains in the last 1 year or so. But as I always tell you, I'm buying it for the next 18 to 20 years. So I hope to make a lot of money and the kids will enjoy. Thanks a lot for that, Manisha.
But, Nigel went ahead and bought the gold, taking note of Manisha's advice. Never too late to buy gold, Manisha. But at current levels, what would you think makes more sense? Gold or the more accessible silver?
You know what? People are telling us that gold has done its run up and silver will catch up now. And for the next 6 and 12 months, silver actually could outperform gold. So if you haven't bought gold yet, I think silver is your better bet right now.
So we have to then say that silver will get the gold medal in the race between gold and silver.
Mangalam, you better buy one of these two now. You're already taking all the advice.
Silver sounds good.
Okay, all right. Thanks for that, Manisha. Well, on that note, though, we have to wrap up on this edition of Chartbusters. As we do that, though, let's bring you an important notice for all our viewers. Please be cautious of fake accounts on social media platforms. Our anchors do not endorse or recommend any stocks. Exercise caution with direct messages from unfamiliar accounts. Follow us only on our verified accounts and catch all CNBC-TV18 news and updates on Facebook, X, Threads, Instagram and JioCinema.